Winning COMPXM Round 1 to 4 answers, top results 999, COMPXM 2025, COMPXM 2026 Guide to Win, Maximizing Performance in COMPXM, a practical MBA guide for achieving a 980+ score. Introduction. The COMPXM simulation is the culmination of CAPXM's capstone experience, testing strategic decision-making, cross-functional management, and business acumen under competitive pressure. This guide is designed for MBA students and practitioners seeking a clear, structured approach to scoring above 980/1000 in the COMPXM exam. This guide consolidates insights from a high-scoring simulation walkthrough and reframes them using academic frameworks and business logic to help learners understand not only what to do, but why it matters. Strategic orientation and initial setup. Before diving into decisions, participants must interpret the Industry Conditions Report. This document reveals segment-specific expectations for price, MTBF, ideal positioning, performance and size, and age. In our scenario, the simulation contained 4 primary market segments: thrift, core, nano, light. Each segment exhibits unique drift rates, indicating how customer preferences shift annually. For instance, the thrift segment's performance increases by +0.5 while size preference drops by -0.5 each year. Strategic implication: to sustain a competitive advantage, your products must be updated in R&D annually to reflect these drift rates, aligning with evolving consumer demands. Chosen strategy: we implemented a broad differentiation strategy. This offers flexibility across multiple segments, enabling recovery from isolated underperformance and providing a platform for long-term profitability by emphasizing innovation, quality, and market awareness. R&D decisions: aligning products to customer expectations. R&D is the cornerstone of product competitiveness in COMPXM. Round 1 involves refining existing products, ACA, ADAM, R, and ABLE, and introducing 3 new ones, AB, S, and AKA. Modifications to existing products: product performance. Size: MTBF ACA 11.95.9 24,000, ADAM 14.28.2 26,000, AR 7.6 12.5 20,000, ABLE 10.0 10.1 22,000. These changes were made to reposition products near ideal segment coordinates while preserving reliability within acceptable bounds. New product development. Round 1. Product target segment performance. Size: MTBF AB crossover 12.08.0 22,000, S nano 13.15.2 24,000, aka light 15.27.2 22,000. R&D cycle optimization via TQM. To accelerate product readiness, we invested $1,500 per round in all TQM initiatives. This investment reduces the R&D cycle, material costs, and labor costs, while also boosting demand. Key insight: launching new products early ensures sales in subsequent rounds, enabling revenue diversification and customer retention across evolving segments. Marketing strategy: pricing, forecasting, and awareness. Marketing in COMPXM involves 4 decisions: price, forecast, promotional budget, and sales budget. Pricing strategy. Round 1. Pricing was aligned with segment expectations and competitive benchmarks. Product price: ACA 40, ADAM 42, AR 20, ABLE 30. Promo and sales budgets: each product received $2,000 in both promo, to raise awareness, and sales, to increase accessibility, ensuring maximum visibility and reach. Forecasting demand. Round 1. Product forecast units: ACA 890, ADAM 870, AR 1880, ABLE 1870. Execution tip: utilize last round sales data and market demand to forecast accurately. Over or underproduction significantly affects inventory holding costs and stockout penalties. Production decisions: synchronizing capacity with demand. Production planning ensures forecasted sales are met without excess inventory. Each product's forecast is adjusted for beginning inventory. Product forecast inventory: production: ACA 890,267,630, ADAM 870,219,660, AR 1,880,761, 1,120, ABLE 1,870, 54, 1,820. Capacity and automation investments for new products. Product capacity automation AB 355.0 S 355.0 aka 357.0 Insight. Automation reduces labor costs but increases R&D revision times. For new products, start with moderate automation and adjust upward based on segment labor sensitivity. Human resources, HR, investment. Enhancing productivity. HR decisions are often overlooked but critical. We allocated recruiting spend, $5,000 training hours, 80 per employee. Expected outcomes, lower turnover rates, higher productivity, improved labor cost efficiency, amplified by TQM. Financial strategy, funding growth with balance. A dual source strategy combining current and long-term debt was employed. Debt type amount, $000, long-term $14,700, current debt $20,000, cash position, start, $31,543, end, $54,122. Key insight. Funding should support capacity expansion and marketing without excessive dilution, via issuing equity, or leverage, overusing debt. Performance monitoring via balanced scorecard. The balanced scorecard offers a snapshot of company health across financial and operational dimensions. Round 1 score, 66/80. Category score, stock price 6/7, profit 6/7, ROA/ROS 6/6, contribution margin 4/4, days of working capital 4/4, plant utilization April 4, inventory costs April 4, customer accessibility April 4, customer awareness April 4, employee turnover June 6, TQM reductions February 2. Round 2 adjustments and scaling. R&D adjustments. Round 2, product performance size. ACA 12.05.8, ADAM 14.48.0, AR 7.8, 12.3, ABLE 10.39.7. Newly introduced products, AB, S, aka, continue development and are launched this round. Marketing. Expanded forecasting. Product forecast units. ACA 1450, ADAM 1400, AR 2000, ABLE 1900, AB 600, S 650, aka 650. New product pricing. Round 2, product price AB 35.0, S 36.5, aka 37.0. Production. Scaling up product inventory forecast. Production. ACA 66 1450, 1400, ADAM 10 1400, 1410, AR 0 2000, 2010, ABLE 450, 1900, 1450, AB 0 600, 610, S 0 650, 660, aka 0 650, 660. Capacity investments were made to support next round scaling. Finance and HR consistency. We maintained prior HR policies while funding round 2 through $20,000 long-term debt. This ensured a healthy cash balance of $52,400 without triggering financial risk metrics. Final round 2 scorecard, 78.5/80. Metric score. Stock price 7/7, profit 7/7, contribution margin 4/4, inventory management 4/4, customer accessibility 4/4, customer awareness 4/4, SG&A expense efficiency 4/4, employee productivity 6 out of 6, TQM ROI 2 out of 2. Summary. Achieving a near-perfect score requires synchronizing R&D, marketing, production, and financial decisions in light of evolving segment preferences, leveraging TQM to accelerate outcomes and control costs, and maintaining cash health through strategic financing. Conclusion. This guide demonstrates how deliberate, data-driven decisions aligned with academic frameworks, e.g., balanced scorecard, differentiation strategy, TQM, can generate exceptional outcomes in COMPXM. MBA students and professionals can replicate this approach by rigorously analyzing reports, forecasting realistically, and managing operations with precision. Consistent iteration across all functions, especially in R&D, marketing, and finance, builds momentum for sustained high scores in each round. With disciplined execution, achieving a score above 980 in COMPXM is a realistic and rewarding objective.